can silver really go higher from here, given that we're at almost all-time highs?
So my short answer is yes, absolutely. And to qualify that a little bit, if you look at the last two times that it reached 50 or close to 50, 1980, 2011, both of those times we had parabolic rises. This time we had it might feel parabolic to some over this, especially the last, say, 6 months or so. It has been a very, very sort of steady rise, and you had some days full dollar gains. This is a lot more steady in terms of approach to $50. It's a lot more sustainable. We had it meaningfully past $50, up to $54, as you said, and now still hovering near that level, even though it has pulled back. So very, very different kind of approach to the $50 level. And I've said that that was going to be a milestone, a huge milestone for silver. It had been until recently, till it took out $50. It had been the only metal that had not meaningfully surpassed its 1980 high. That's now the case, although again it has pulled back. But I do believe that it's going to regain 50. 50 will become a new floor, and for various reasons we can talk about, move considerably higher from there.
Why are our best metrics of demand consistently below the reality year after year?
I believe that these forecasting groups, they purposely try to remain conservative. They want to maintain credibility and not sort of over promise, so to speak. And so you're right. Yes, through the 2010s, we've seen that the IEA kept projecting 5 years out. Each year that they would project for the next 5 years, if you look back with, the benefit of hindsight, they were off by 2/3. So installations were 3 times what they had been predicting. And this was year in, year out. So it is possible that solar installations in China could be slowing. I'm not sure about plateauing. Maybe at least the rate of growth is slowing. But there are some things to consider. First of all, you've got this, we've talked about this before, but you've got this new technology that's kind of taking over. These are acronyms, but the established one is was PERC. Now the new one is TOPCon. Already last year, I believe, 63% of new solar panels were being produced with this new technology. That requires 40 to 50% more silver per panel. The reason you would do that is because they're more efficient. It justifies the higher cost per panel. You're getting more energy output from that panel. So although the manufacturers of the panels, have been for decades thrifting and trying to reduce the amount of silver that goes into each panel, I believe that we're going to start to see that trend up. In other words, they will probably start consuming more silver per panel. It'll take some time for this to show up in the statistics, but I think that's what we're going to see. So that's an additional source of demand for silver from, even if demand stayed flat in solar panel production. Now you have this whole added layer of batteries. The cost of batteries and to store the power in batteries is falling and expected to fall by half over the next 10 years. We already expect for 2025 that we're going to see battery installations at 60% of 2023 solar panel installations. So that is really catching up very quickly. And I think the takeaway from battery and solar is that battery helps to make solar what I view as baseload power. Obviously, solar is there when you've got sun, and then the problem is nighttime. But if you can store the if you can store the power that you've produced from solar during the day and then draw on that at night, then you can have this constant baseload power, which you get from things like nuclear, for example, or natural gas, whatever it might be that utilities use, coal, whatever else. And so that just makes solar that much more attractive. Then you've got a few other layers to add to this. You've got the fact that, technology companies, most companies are looking to be greener. They're looking for sources of power that are considered carbon neutral, carbon free. Solar is considered one of those. And what we've seen is that you've got the large tech companies. Many of them quickly went to nuclear, but they were able to tap into underutilized nuclear capacity. and they have the billions or tens of billions it takes to, lock that up very quickly. And because it was untapped or dormant, you can kind of bring it back online more quickly. But if you're looking at new nuclear, you're looking at 15 years. Compare that to solar, you're looking at a year and a half to get a solar farm up and running. So it's a tenth the time that it takes. And we've seen uptake from tech companies in the US adopting different kinds of power. They're adopting they're adopting solar to the tune of 5 times faster right now over the past year or so. So you see that solar is certainly attractive to them. And you're not depending on a utility that's producing the power and to be connected to that utility. Many times you can actually have, if you've got the land to build out the solar farm, you can be completely off grid, so to speak. So you've got your farm, you're drawing the power from your solar farm, and you're not depending on someone to provide this power to you. That's very appealing. One other aspect to that, if I may, Ernest, and that is what we see in terms of projections for power demand in 2 ways. One is data centers have become a huge thing in terms of requiring power. We're seeing that in the U.S. in particular, where we get a lot of the information regarding that. Data center electricity growth is supposed to be on the rate of about 22% over the next decade. AI power demand is supposed to grow by 31% annually over the next decade. So these are just almost exponential growth levels in these inevitably unavoidable sources of demand for more power. And as we've just talked about, solar is likely to be a key source of that power. And again, silver in the solar panels, silver in the batteries, crucial.
Can silver really go higher from here now that we're hovering around all-time highs? My short answer is yes, absolutely. In fact, I think this time the move is fundamentally stronger, more sustainable, and far more significant than anything we've seen in decades. Let's put this into perspective. In 1980, silver hit roughly $50 an ounce in a parabolic, panic-driven spike. The Hunt brothers tried to corner the market, the COMEX panicked, and the US government stepped in to crush the rally. That was a speculative firestorm. Then again in 2011, silver hit $49, again in a vertical sprint that lasted a few months, fueled by QE euphoria and fears of dollar debasement after the financial crisis. But this time is different. This current rise from the mid-$20 up through $50 and beyond has been much steadier. Yes, we've seen days with $1 or $2 jumps, but it's been a disciplined climb, not a mania. The chart looks healthy, not hysterical, and that's what makes it so important. It's sustainable. Silver is building a new base at these levels. We're already seeing silver behave like gold used to behave in the old days, quietly, steadily, and persistently breaking through psychological barriers. And once we made that decisive move past $50 and reached $54, something historic happened. For the first time in 44 years, silver finally exceeded its 1980 nominal high in a meaningful way. Every other major metal, copper, nickel, platinum, even zinc, had long ago left their 1980 highs in the dust. Silver was the last holdout. Now it's joined the club. Even with this recent pullback, silver is still hovering near those highs, refusing to break down. That's not a sign of weakness. It's the kind of consolidation that precedes the next leg higher. I believe $50 will become the new floor, not the ceiling. From there, we could see silver move considerably higher for several reasons, both structural and technological. Let's start with the demand side. Every year, analysts and forecasting agencies publish their estimates for silver demand, and every year, they underestimate it consistently. You could set your watch by it. The International Energy Agency, IEA, for example, has spent the last decade projecting future solar installations that turn out to be laughably conservative. When you look back 5 years later, actual installations are often double or triple what they predicted. Why? Because they prefer to stay credible. They'd rather be pleasantly surprised than risk being called alarmist, but their chronic underestimation has caused investors and policymakers to miss what's really happening. The world's appetite for silver is accelerating far faster than official data suggests. Nowhere is that more obvious than in solar energy. In 2010, solar consumed around 50 million ounces of silver per year. In 2024, that figure likely surpassed 180 million ounces, and it's still climbing. The entire renewable energy transition hinges on silver's unique properties. It's the most conductive metal known to science, better than copper, better than gold. Every solar cell needs silver to function. And here's the twist. After decades of thrifting, that is, reducing the silver content per panel, manufacturers are now reversing course. Why? Because of new technology. The old PERC cell design, which dominated for years, is being rapidly replaced by a new one called TOPCon. And TOPCon cells require 40% to 50% more silver per panel. That's right. Just as the world ramps up solar deployment to record levels, each panel is using more silver, not less. In 2023, about 63% of all new panels were TOPCon. By 2025, it'll likely be over 80%. That's a tectonic shift in demand, and it hasn't even fully shown up in the data yet. At the same time, the world's largest solar producers, China, India, and the US, are doubling down. China installed more solar capacity in 2023 than the entire world did in 2020. India's new industrial policy targets massive solar expansion for energy independence. And in the West, ESG mandates, green subsidies, and corporate net zero pledges are driving an unprecedented build-out of renewable infrastructure. But silver's not just about solar anymore. The next great frontier is energy storage, batteries. For decades, one of solar's biggest drawbacks has been intermittency. The sun doesn't shine at night, but now with battery costs projected to fall by half in the next decade, we're finally approaching the era of solar plus storage as true baseload power.
I think that silver is now viewed as much more critical and crucial for industry. We see investment demand, of course, ebb and flow, but there's at least anecdotally some in the last couple of months, we've seen some tremendous stories about, people flocking to bullion dealers and buying silver. But the mining executives now, I think they can be more confident of higher and sustained higher silver prices. So they'll be more willing to commit to exploration, to expansion, to acquisitions. And it's a small space. So I think that's important. The critical metal, critical mineral side of silver, I think, is absolutely a new dimension that has been added to the silver sector. In the US, they have a critical minerals list as we speak. To my understanding, it's only on a list where silver is being considered along with other metals to end up potentially on their critical minerals list. So it's being reviewed and considered, partly because of the government shutdown that could take a little while longer to get a final answer on. So we don't know. Will that happen? Will it not happen? I think it's significant just that it's been added. This is the first time it's been added to be for consideration. What we have seen, one thing to keep in mind too, Ernest, is that 43% of all of the silver consumed in the US is imported. So nearly half of all the silver they consume, they have to bring in from other countries. So they're certainly not self-reliant when it comes to silver, far from it. And again, sort of an aspect of critical minerals and what we've seen happening. And it's interesting, how you've pointed out that the solar aspect of silver was a more sort of widely seen way that everyone was kind of on board, and it might have been more partisan in some ways. It was encouraged more by some administrations and so on. But this fact that silver may be considered more and more as a critical metal is something that I think all parties are going to be on side with. The world's becoming deglobalized. It's becoming more regional. We've seen in the US, the administration has taken steps that we have not seen happen for a long time, where they've started to buy into companies. And, we've seen that a little bit on the tech side, but now we're seeing it on the mining side. They're taking meaningful positions in companies that have critical minerals. Lithium, for example, copper, for example. They're starting to streamline permitting. They're making it easier for these projects to come to come on board and eventually get built out and produce. We're seeing a lot of support politically for critical minerals and silver potentially in particular. So that absolutely is a new dimension. And I think that is just one more thing that makes sustained high silver prices just that much more likely.
On the investment front, silver's role is changing dramatically. For years, investors treated it as gold's little brother, a hedge that moved with sentiment but lagged in conviction. That's starting to change because silver now sits at the intersection of monetary distrust and industrial necessity. It's both a precious and an indispensable metal. We're in an environment where government debt is exploding, interest costs are overwhelming, and trust in fiat currencies is eroding globally. Central banks are quietly hoarding gold. Last year saw record purchases not seen since the 1960s. But unlike gold, central banks don't hold silver. That means the public market, investors like you and me, can still participate freely. What happens when retail and institutional capital wake up to the idea that silver is both money and technology? You get a perfect storm. We're already seeing signs of it. Physical premiums are climbing. COMEX registered inventories are at multi-decade lows, LBMA silver stocks have fallen sharply, and Shanghai's vaulted silver is being drained as well. The world's visible silver inventory has fallen from around 1.4 billion ounces in 2020 to barely 800 million ounces today. And much of that is not truly available. Once you strip out what's held by industrial users, ETFs, and long-term investors, the freely available float may be as little as 150 million ounces. That's just 5 months of industrial demand. Now imagine what happens when investment demand surges again, like it did in 2020 during the pandemic or in 2011 during the last major bull run. The system simply can't supply that kind of demand without a massive repricing. And that's why I believe $50 will become a new floor. It's not just about charts, it's about physics. The cost of production, the scarcity of new supply, and the intensity of demand are converging in a way that fundamentally redefines the equilibrium price. On the supply side, it's even more concerning. Roughly 70% of silver production comes as a byproduct of mining other metals, mostly zinc, lead, and copper. That means silver supply doesn't respond quickly to higher prices. You can't just turn on a silver mine. Unless those base metals rise significantly, new silver supply won't materialize. Meanwhile, the few pure-play silver miners that exist are struggling with declining ore grades, rising energy costs, and increasing regulation. It's becoming harder and more expensive to get silver out of the ground. The average all-in sustaining cost, ASC, for primary silver producers is now around $22 to $25 per ounce. That's almost half of today's spot price, suggesting profitability is improving, but it also shows how tight the margins remain. If silver truly enters a structural bull market, mining equities could deliver extraordinary leverage. Historically, when silver doubles, the miners can triple or quadruple. But remember, this isn't 2011. The number of quality publicly traded silver miners has shrunk dramatically due to consolidation. There are fewer pure plays, which means capital chasing the sector will have fewer outlets. That alone can supercharge the equity side of this bull. Let's not forget the macro backdrop either. The global debt to GDP ratio is over 350%. Governments are trapped. They can't raise rates enough to fight inflation without bankrupting themselves. But they can't cut rates without reigniting inflation. The only politically viable solution is financial repression, keeping rates artificially below inflation to slowly destroy the real value of debt. That's historically bullish for real assets, especially precious metals. Now combine that macro picture with silver's industrial surge, and you have something unprecedented, a metal that's simultaneously a store of value, a key to the green revolution, and a hedge against monetary instability. When I talk to institutional investors, I often tell them, silver is the bridge between yesterday's money and tomorrow's technology. That's not just a slogan, it's reality. Consider the electric vehicle revolution. Every EV uses up to 60 grams of silver, double what a traditional combustion vehicle uses. Multiply that by the tens of millions of EVs expected to be produced annually by 2030, and you're looking at a demand increase of more than 100 million ounces per year from autos alone. Then layer in 5G networks, robotics, medical devices, and the electrification of infrastructure. Silver is embedded in all of it. The metal has over 10,000 industrial applications and counting. You could remove gold from the world and life would go on, albeit less shiny, but remove silver and modern civilization grinds to a halt. Now here's a fun thought experiment. What if silver were valued not as a precious metal, but purely as a strategic industrial one? The total global value of annual silver production at today's prices is only about $45 billion. That's less than the annual revenue of Apple's AirPods division. One medium-sized tech company could, in theory, buy the world's entire silver supply for a year. That's how small this market really is. So when institutional money finally realizes that, it won't take much capital to move the price dramatically higher. Now, some skeptics argue that silver's volatility makes it unreliable as a store of value. And yes, silver is volatile. It's emotional, it's reactive. But volatility cuts both ways. It also means upside moves can be explosive. This current move feels nothing like 1980 or 2011. There's no speculative frenzy, no retail mania, no media hype, yet silver has methodically reclaimed its historic highs. That's the hallmark of a real bull market, not a bubble. So where could it go? I believe silver's next major milestone will be $75, followed by a move toward $100 within the next 12 to 18 months. Beyond that, if monetary instability worsens or industrial shortages intensify, triple-digit silver is not only possible, it's probable. The difference this time is that the floor is firm. Every pullback is being met with immediate buying, especially from Asia. The physical flows are clear. Silver is leaving Western vaults and heading east. The Chinese, the Indians, and the Middle Eastern buyers are absorbing supply hand over fist. This eastward migration of precious metals mirrors the broader global power shift. The West may control the paper markets, but the East controls the metal. And eventually, the physical market will dictate the paper price, not the other way around.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.